Thanks, Cliff. We're going to have a fun geology lesson that has big implications for the global economy. We're talking about 17 different metals with funny names like cerium and scandium and europium. Can you name all 17? You don't have to, but...
Cerium, lanthanum, neodymium, praseodymium, gadolinium, europium, samarium, lutetium, yes,
I'm taking your word for it that you can get all the way through. That's pretty good. Pretty good. I didn't even prep her for that. So now that we've heard some of those funny names, tell us what rare earth metals are and why they're so important.
Okay, so this may seem like a somewhat opaque topic for many of you in the audience. However, with all of you, I guarantee that every single one of you has at least one device, either on the table or in your handbag, an electronic device. So each of you today is carrying a rare earth around with you. Most of you probably came here in a car or a bus or something else. Every single one of those vehicles actually has rare earths in it. And indeed, you know, you may have used electricity, which came from a renewable source, which no doubt used rare earths as well. So, just explaining that, rare earths are a series of 17 elements. You find them on the second bottom row of the periodic table. They are valuable because they are reactive metals. In all of the things that I have talked about, they are used in very small quantities. So if you are, for example, the CEO of an automotive company, you will rarely think about rare earths. Because if you're looking at your bill of materials and $25,000 for a car, rare earths may only be $200 in that. However, you will sit up and pay attention if you are unable to source those because your production line stops. And in the last decade,
because they won't run without the rare earth metals.
Well, you cannot even have an internal combustion engine vehicle without rare earths because cerium is in the AutoCAT system in your vehicle that converts carbon monoxide to carbon dioxide. So, twice in the last decade, CEOs have had to sit up and take notice. And that is in 2010, China threatened to stop the export of rare earth materials to Japan. And again, in the trade wars, or trade tensions between the US and China over the last 18 months, one of the threats from China has been to stop the export of rare materials. That means that one journalist, not this one, not Fortune, actually said that the trade tensions meant that Lynas was the prettiest girl at the dance. And I'm very happy to wear that badge.
Okay. Let's give some context for why you're the prettiest girl at the dance, other than your lovely green dress. But so China has the largest reserves of rare earth metals, and but they produce even beyond, you know, the scope of their reserves. They dominate the market. The vast majority of production globally is from China. And then there's your company, essentially. You're the only producer really outside of China. How did it get to be that China dominated production, that is not being produced anywhere else in the world until your company came along, and why does your company exist as that lone competitor?
So China has their dominant market position because 30 years ago they decided that they would. And so at that time there was a flourishing outside China rare earths industry. Deng Xiaoping famously said the Middle East has oil, China has rare earths. And at that time, and bearing in mind that China thinks generationally, here in the West we tend to think in 3 or 4 year electoral terms. So China said, we are not only going to be strong in the resource, but we're going to build the downstream supply capability because that's where the value to our economy and the jobs are. And so over 30 years, that's what they've done. So they started with the resource and they've leveraged that. They've attracted firms to actually come in and invest in China, and they've leveraged that. And their China 2025 strategy is no rare earths exported except in value-added form. So I'm sorry, the second part of your question is why us? Well, in 2010, China and Japan were having a bit of a spat over some islands, and so China threatened to stop export. and that caused the rare earths crisis, it's called in the industry. There were two firms that came out of that, Lynas and Molycorp in the US, as alternate suppliers. The Japanese government provided the last tranche of funding for Lynas, which got us up and going, and they have proven to be a wonderful partner. Molycorp also started, but the Chinese kept the price very low for a very long time, and it filed for Chapter 11 in 2016.
So the Chinese have effectively created an almost monopoly situation through market forces by providing by far the lowest cost product over time. And in fact, the US is heavily dependent on their product.
Yes.
They did cut off supply to Japan. They haven't exactly done that in the trade negotiations that have been going on. How real do you think is the threat that they might pull what they did with Japan again and play that card in the trade war with the US?
I think it's less likely, and the reason why is because Lynas exists today. So our rare earths processing plant in Malaysia and our mine at Mount Weld, which is recognised as being the richest deposit in the world, are sufficient to supply outside China markets today, although as it grows over the next decade with new 21st century technologies, that won't so much be the case. So I think it is less likely. However, governments, particularly the US government, Australian government and the Japanese government, are talking about building new rare earth supply chains, potentially developing new resources. And I think that we will see other dynamics play out in the market to ensure that that doesn't happen.
I want to remind everybody, if you have a question, get ready. We'll open it up in a second. So you mentioned your facility in Malaysia. Your company started in Australia. You're Australian. Your mine is in Australia, but you moved the headquarters to Malaysia. Explain why that is, and then where you might be expanding in the future.
So we're an ASX-listed company, and yes, our mine is in Mount Weld in Western Australia. Some people say, where's that? It's 865 kilometres northeast of Perth. And others will say, well, what's 865 kilometres northeast of Perth? And I'll say, not very much. Certainly all of our workforces fly in, fly out. The processing of rare earths requires significant other inputs, and Malaysia requires foreign direct investment. So we were, before my time with the company, invited to put the processing plant in Malaysia. And typically this has worked very well for us, except for a very small group of activists in Malaysia. But it's a Commonwealth country. That may mean less to the Americans here, but it means that its laws and its political processes are based upon English laws and processes. So is Australia. We feel very comfortable with that. We're in a purpose-built, heavy industrial environment. We have access to a skilled English-speaking workforce, and we're close to our markets. So it's a very good place for us to operate. When I came in and as the CEO, we had many offices, and we also were broke. So I sort of said, well, our people will either be where we make things or where we sell things. We couldn't put our head office at Mount Weld, frankly. It's a very long way from anywhere.
Too remote.
So therefore, we moved our head office to Kuantan.
So if there's any questions, just raise your hand and we'll get you a mic. You just talked about the circumstances that led us to China dominating this market for rare earth metals, and you've spoken a lot about how the Chinese government, supported policies that led us to this point, and that you'd like to see other governments take some action to, make the market more dynamic. What would you like to see happen if you're speaking to the U.S. government, European governments, CEOs of big potential customers around the world? What are the policies that would make it a more open, competitive market that you think would benefit everybody?
So I think that the first thing to recognise is that it's a small market. And I think the Chinese
$4 billion, right?
Exactly, yeah. Globally, have given us an excellent case study in developing rare earths. They did not let 1,000 flowers bloom, right? And it's heavy capital, our business 1.4 billion in capex to actually stand up the facilities. So they created a hub. Northern rare earths in China is 60% of the Chinese rare earths industry. It's fully integrated from mine to magnet. It's got industrial research institutes, real skill and capability. So I think the idea outside of China, we are very fragmented, right? And actually having a more strategic approach to what is indeed a strategic mineral, I think is probably the most important thing. So being more aligned and more planned in our approach, I think is going to give the West a better outcome.
So you're talking about, or you have explored opening a new facility in Australia, but also potentially one in the United States. So we were talking about this backstage. Explain why you would be opening this new kind of facility in the US and how that would open in the market. Because what's interesting to me is that right now, even though you're the only supplier outside of China, you basically don't sell any of your product to the US. The US is still buying almost completely from China.
Yeah. Well, actually, there's two categories. So the magnetic materials, which are the sexy materials these days, they're the ones that go into your electronics and your cars and things like that. The US buys virtually all of those from Chinese suppliers. The catalytic materials, which are used particularly in, say, oil and gas refineries and otherwise, we have long-term contracts with US producers. So, but they are lower value than the other. But there is one category, when I reeled off all those names of rare earths before, they're classified into light, medium and heavy rare earths. Now, we primarily, our business is based upon light rare earths, although our deposit also has significant heavy rare earths. So those at present come out of the separation process as a compound, which is then sold to a separator in China. Heavy rare earths, actually the US cannot send its military to war without heavy rare earths. And at present, the only place in the world that separates heavy rare earths is China. So the facility that we're talking about establishing in Texas in the US in the first instance will be a heavy rare earth separation plant, and we will then follow that up with further industry development.
Great. I saw we do have a question. We'll try to sneak it in really fast. Time is running short, but if you could just identify yourself real quick with the mic, it's coming right there.
Orna Nichana, it was just a question of understanding. Is this an economics issue or is it a shortage issue globally? And can rare earths be recycled? Because you talked about running out if demand continues to grow. Do you see what I mean? If we couldn't get rare earths from China, how big a set of trouble are we in?
And can it be solved through recycling?
It can't be solved through recycling because we don't have enough end-of-life products for the materials which are required. So we have, as part of our plan for growth, we have a recycling element to that, but we don't have enough end-of-life products yet to feed that. In terms of running out, we're not running out. Rare earths are actually quite plentiful. It's a triumph of branding. It is simply being able to identify sources that are economic to develop.
Rare earths are not rare, but they are crucial to the global economy. Thanks so much, Amanda, for joining us.
Thank you. Thanks, Brian.